going to discuss August Week 3 pre-markets. Today is our review. Before we get started, the quote of the day is, "Money is freedom, money is a private plane, money is no metal detection." 50 Cent. How the fuck do I go forward on this? Okay. Alright, so what we're gonna do in this PowerPoint is go over the Monday through Friday, the pre-market patterns. So first we're going to understand the purpose of this. So it's basically to be able to identify pre-markets with the most upside, either bullish momentum or downside bearish faders during open market hours. So this is specifically looking at the pre-markets, taking notes, and then seeing which ones provide bullish moves or bearish moves in open market. We also, we want to categorize kind of each pre-market ticker into certain buckets. And another main reason we want to do this is for our brain power. The less we spend trying to understand the pre-market, the more kind of energy preservation we have for open market. So here's kind of the criteria that we're going to go off of. So we're doing day one tickers only. That just means it's a new ticker. So if the ticker was relevant the day before and it's up again, we're not looking at that. We're looking at new news or new gapping tickers. We're looking at small cap tickers with a falling less than $10, consistent volume during pre-market. So we're not looking at something that has little volume and has no structure to it, some pre-market structure, and then basically we want to look at stuff that has over 10% gap. And as far as pre-market structure, we want something that is fading into open, which we'll look at here in a second, flat or pushing into open, or no pre-market. So we'll look at those right now. So flat, basically, where are we at? 2 minutes. Flat or push into open are tickers that are moving upwards into open or moving flat into open. And flat meaning it's already made a move upwards and it's kind of just consolidating. So that's what we're talking about when we say flat or pushing. Fading is a stock that made a giant move and then has just kind of ski slope faded into open. No pre-markets, which we're not really going to spend a lot of time on. But that's just basically, to me, there's no structure, there's nothing going on. The stock just decided to push midday because of mid-news or something else. So that is that. And then the price range, we're also going to look at stocks under $1, between $1 and $3, or over $3. The under $1 makes sense. That's more of a penny stock. Between 1 and 3, 3 is kind of an arbitrary number. But to me, that's kind of a certain category. Stocks that are over 3, over $5 move a little bit different. But $3 to me is a good kind of range. So understanding the outcome. Basically what we want to do is take this information and understand what is going to have momentum or what is going to be a fader. So momentum, what I mean by that is a stock that's going to have a bullish setup during open market hours, and this is pushing over the opening price. A stock can fade into open and have bullish price action, but to me, the stocks with the most potential are the ones that are, are mostly breaking above the pre-market high days. Faders, flat price action into open. So basically anything that opens and then the price action starts falling under that number, consider that a fader. Again, faders can produce moves to the upside, but we like to stay away from those. So here's an example of momentum of a stock. So it's opening above or it's pushing above the opening price over VWAP. So these momentum versus fader is kind of subjective to me, where I'm kind of classifying it myself. People can view it other ways, but to me, I'm kind of putting it into this category. This is what a fader to me is. You have some chop at open, but mostly it's fading under the opening price. Alright, so we're going to first start with the price range. We're going to start with the momentum stocks. So total this week was 21 momentum stocks that I categorized, so under $1. So 2 out of 21 stocks that had momentum came from under $1, so only 10%. 10 out of 21 came from $1 to $3, 50%. So 9 out of 21 came for over $3, 43%. So basically, all that being said, 90% of stocks opened over $1. So we should be looking at stuff that's over $1. That's all that is saying. Majority of the stocks this week that had momentum, we are over $1. So now we're looking at faders. 17 out of 21 stocks. Let me get this. 17 out of 21. Or not out of 21. 17 out of 27. Since there was 27 fading stocks that we categorized for this week, we're under $1. 9 out of 27 were from 1 to 3, 33%, and 1 out of 27 were over 3. So to me, looking at this is kind of a little bit reverse of what the momentum was. Basically, stocks under $1 that were gapping up. 17 of the faders were 63% of the fading stocks were stocks under $1. So basically, you want to stay away or understand that the penny stocks are not as hot as they once were. Over half of the fading stocks were penny. Yes, that is correct. So now we're going to look at it from combining the momentum and faders in the under one category. So the chances of a stock having momentum under $1 total is 11%, and the chances of it being a fader are 89%. So when Monday comes around and we have 10 stocks, 3 of them are penny stocks or 4 of them are penny stocks, we're going to assume that most of them are going to be duds. From $1 to $3 chances, momentum kicks up here. We have 10 out of 19, so 53%. So basically this is a 50% range for 1 to 3. So this is where you can't really extract a whole lot there. It's just half and half. And then over 3 we had 9%, 9 out of 10 be momentum. So that's also critical. So for me, the two that provide the most information are the under $1 and then the over $3. So under $1, we assume that it's going to be a dud. Over $3, we are assuming that this could potentially have momentum. So this is kind of a recap of it. Be cautious of under $1 penny stocks, only 10% produce momentum. Stocks ranging from 1 to 3 were basically 50-50, no clear edge, and stocks over 3 had a higher chance of momentum. So we're gonna move over to price action. Gotta keep this video under 15. So we're doing the same thing we're gonna put together momentum and the faders, and we're gonna look at the price action of the pre-market. So fading into open is what we looked at earlier. That's kind of that ski slope action. So 6 out of 21 momentum stocks faded into open. So a small portion of the momentum stocks faded. 13 out of 21 were flat or pushed into open. 2 out of 21 had no pre-markets. The no pre-markets are tough to analyze, but I like to just throw it in here anyway. So basically over half of the momentum stocks were pushing or flat into open. So anything that looks bullish is flat or pushing up into open tends to have more momentum. Looking at the faders, 20 out of 27 were fading into open, about 75%. 7 out of 27 were flat. That should say flat or open, or flat or pushing into open. That's 25%. But again, no pre-market. We can't get that from faders, so don't worry about that. Right, so most open bell faders were the result of fading price action into pre-market. And so we're also going to look at the overall buckets combining both momentum and faders. So if something is fading into open, the chance of it being momentum is 25%, chance of being fader 77%. And if it's flat into open, momentum has a 65%, fader is 35%. So basically the recap of that, stocks fading into pre-market have a 75% chance of being bust. Stocks that are flat or pushing have a over 50% chance of producing momentum. Now this is past week. These numbers are going to change next week, but again, this is all projections into the future. So putting it all together, for price range, we're looking for stocks over $3 that are opening over $3. Stocks from $1 to $3 are kind of neutral. You know, we don't know, but we like those over the stocks under $1. Stocks under $1 tend to be bearish. And then for price action, we want flat pushing into open, and then fading into open results usually in bearish. So for next week, if we see a stock that is a penny stock that's fading, there's a higher chance that that thing fades. If we're looking at stocks from over $1 that are pushing into open, those are going to be higher on the list. So now we're just going to run through some fader examples. These are all the ones that I actually categorize, so we're just going to kind of blow through these. This is RDHL. Again, so it's a penny stock. It's fading into open, and then it just fades out. SPRC, another fader. ASNS, AUD, Hollow. So even something like this, we don't consider this bullish to me. You know, you could say that there's one trade there, but we're looking for something that continues to push up. So INM, this one is this one moved from 20 cents to $1, so what, 400% in pre-market, and then just faded. So, and to me, yeah, this is to me, like, if you're looking at an example, this is flat into open because we're still like 300% away, but ends up fading. This one's flat into open, fade. This is a fade into open, fade. Another fade, fade. Fade, fade. Flat, fade. This one's a little bit difficult. This one just literally just stayed flat. To me, I categorize it as a fader. We could say it's a little bit bullish. It's kind of in between. Okay, flat fader. We're gonna blow through these. You get the picture. Flat fade, flat fade. Let's get to the momentum so we can see some momentum stocks. So day one momentum. This pre-market is kind of garbage. I don't know why I really include this one, but this one's flat, so it kind of looks like it's fading. But to me, we're still well above this part. So this is why we're momentum. You can see most of these are either flat or kind of pushing into open. Some of these are fading, like this one. This one has no pre-market. This one essentially no pre-market. Flat pushing. You see this one had no pre-market essentially, and then it popped here. Multi-days, we're not looking at multi-days. So anyways, to kind of recap, go all the way back. Here we go. Again, we're looking for stocks over $3, $1 to $3 or over $3. That's flat pushing into momentum. Those are the highest chances being momentum, and then the stocks that are under $1 in the penny land that are also fading into open, we want to avoid. So GG's and bye bye.